Good morning, traders from all around the world. Welcome to another Flow Show. We write Wednesday, 30th of July. First of all, before we say anything else, let's hope that any people who were anywhere close to that big quake which hit eastern Russia overnight are all safe. There were some tsunami warnings, but luckily enough, they did not materialize in the expected or feared size, and those tsunami warnings are gradually getting lifted. So really hope that everybody is safe and that things will have remained at just some material damage. Yeah, I'm pretty well placed, as people in our room know about earthquakes and tsunamis because I was there for the big Japanese one in 2011. So really, it is a very very unpleasant experience. I can testify that. So I hope everybody is okay. All right then. You can still enlist and you can still sign up for a very cool discount, 40% discount on monthly subscriptions, as you see here. That is still ongoing. So if you're not yet in our community, no time to waste. It's really the best community, traders community. Everybody helps each other in there, that there is on the World Wide Web. Also, if you have not yet submitted your name and email, you can still do that to receive our newsletter, be kept up to date about all the changes that are coming um, in the Forex analytics community, which is evolving into trading analytics. You only need to do it once. You don't need to repeat the email address on there regularly. Once you're on there, you will be on the mailing lists and know everything about it, and have a chance to also win one of the trader funding programs that one of the I think it's two this month, who are the goodies that we give away for all the people who are subscribed to the newsletter. It is also the condition to be able to listen and watch our live risk webinar that we will be holding on the 7th of August, with virtually the whole team will be there. So something not to miss, especially for the traders who struggle a little bit with their actual vision of markets, approach to the markets. But it's really going to be interesting for everybody because obviously trading is not a one size fits all. So all our members of the team will explain how they look at trading, how they manage their risk, which is obviously the biggest thing that you need to have under control when you trade. Okay, let's see what the headlines were overnight and this morning. Again, trade negotiations, trade discussions are still very much ongoing. We heard also from India, we heard from South Korea, those two at least, and some others as well, that they continue to try and find kind of a solution before the first of August deadline. But India has already said that the 1st of August should be a soft deadline, and they will continue to negotiate well past that deadline if necessary. We also hear know from China, US, that they are trying to find an agreement to prolong the 90 days the tariff truce that is in place now, which is also due to expire in the not too far away future. So they are trying to get to an agreement to extend this truce period. We've also heard, and that is from the Germans yesterday as well. The German economic minister, there still seems to be some confusion, whether it is with the European structure of the deal, whether it is with even the Japanese deal, because we heard from Akazawa yesterday as well. The pen has not been put to paper really yet, because yesterday the German economy minister says we are currently negotiating from a position of weakness. We must change the new tariffs because they are an enormous burden on our economy. At the same time, though, he was saying that they don't know yet how much of the proposed 600 billion planned investments into the US will fall to Germany. So, I mean, there's still a lot of confusion there around the actual deal and what is really going to be put to paper. So we are not at the end of this story yet. Let's hope we get a more clarity very soon, as we were musing yesterday in our chat room. The market needs clarity, but the only thing that's clear now is that nothing is clear. So we're still waiting for really what is going to be put to paper and signed by both parties, whether it is well, obviously the US on the one side and whatever country or bloc on the other side. Trump put a number of days to the deadline that he's giving Putin. He's now saying that Putin has 10 days to really come over the bridge and start negotiating about negotiating or stopping or cease or having at least a ceasefire in Ukraine. Otherwise, there may be another pretty harsh package coming. The market has taken this. It was already happening, but has taken this as a bit of a green light to push oil higher. But I'll have a quick look at it. We're still not managing to stay or at least or even get there to 70 or and let alone stay above 70. And as a matter of fact, this morning we are slowly leaking lower again. Trump also said that, and that's one for the further away agendas, that he is likely going to send someone else to the next G20 summit in November, which will be held in South Africa, because, and I use his words, he said, I have a lot of problems with South Africa. So we know that there's a few negotiations going on there as well, but being part of the BRICS, and then think about India as well, being part of the BRICS, we know that there is an issue between US and the BRICS. Well, the BRICS with probably everybody. Brazilian president also came back saying that he thinks he needs more respect from Trump than what he's getting now. So this whole BRICS story still has not found a solution by any means. What else? Yeah, then whatever can be forecasted. And for sure, the IMF is not the best forecaster, as we know. They think that the global economy is going to be more resilient than feared before. They actually revised their global economic forecasts in their quarterly forecast report up slightly. Not that it has helped risk in any way, and actually the market really did not pay too much attention. But if anyone wants to read the whole report, good luck. I've posted it in our news and research room. So for anyone who wishes to spend a few hours reading that, please be my guest. What else have I noted down? Yeah, the interesting one, and you know that there needs to be, if Ishiba is going to stay on in Japan, there will need to be negotiations. And actually, the first result of some negotiations with other party has come out overnight, and they um, agreed to abolish the gasoline tax, which was basically in place since 1980. So that's a 45-year-old tax that has now been abolished. And as I was saying on the prior shows, finding agreements with other parties, since they are very adamant in asking for tax reliefs and tax cuts and more spending, etc. It's going to be all part and parcel of the game. This is probably going to cost the government quite a bit, but it's likely not going to be the biggest one that may come through, but it's just part of, and we can't really completely lose track of these because it's all going to be little pieces here and there, which are probably going to put some more stress on the government finances. And what I was talking about on the prior shows as well, and on Face yesterday, the fiscal situation in Japan is something that we need to keep a very close eye on. And then let's go over to what we had in the data. First of all, yesterday we had well, moving on about housing data. They didn't really move the needle too much, but then we had a pretty decent consumer confidence here, and we had a roughly as expected, let's say, jobs openings a little bit lower. The components, not a lot had changed. We saw a bit of rebalancing between one and the other sector, but basically all numbers remain pretty much unchanged compared to the prior number. So the market really did not pay too much attention for that, and already we could see then that the attention has been shifted towards what else is going to come, and which is really the data frequency, central bank frequencies ramping up from today. Um, Atlanta Fed GDP now, as I said, they have like 15, 20 or whatever revisions. It's a bit higher, had a little, maybe just like a few pips impact, but didn't really impact too much. The 7-year note auction was pretty good. You went through for by a full 2 BP, so that's not too bad an auction. And yields have been coming up off a little in the stage, which is probably part of what we are seeing now, that the market stabilizes, barring a couple of currencies, stabilizes versus the dollar. Actually, currencies doing slightly better versus the dollar right now. We will see that we had a small build in the API. We will see if we get a discrepancy again on the EIA numbers later on today. One that we had last week, not that it really has impacted oil a lot over the past weeks, those data, at least not lastingly. Over to today's data, Kiwi. Okay, still below the 50 bar door for the business confidence in New Zealand. But then a bit of a mover overnight. The Australian dollar came back from about 65 and a quarter down to 65 the figure again. We've been talking about the 65 the figure number. It is a bit of a magnet, and going into the US data dump, we are still trading around the 65 number, but has to be said that the expectations for a rate cut have been increasing somewhat again. The Australian yields have been lower, a 3-4 BPs on average across the curve, so we can say that the expectations for the I think it's, let me just quickly check my sheet, RBA on the 12th of August. The expectations for a rate cut, Bullock may be a little bit going a bit softer then, and we may see that 25 or so BPs rate cut over the next meeting. Next, European data. Well, consumer spending in France, printing a positive number actually, but that's a bit of a give back, a bit of a take back, let's say, from a worse than expected, a worse than prior publication number. The French GDP was slightly better than the expectation. Little bit of green shoots. We also saw the German retail sales printing a better number than was expected. But we're talking about 1%, okay? And people looking at if you look at those numbers, inflation adjusted, they are not really good. But again, those inflation adjusted numbers, I gladly leave them to statisticians because the market will likely more react on the raw numbers, let's say. We had a bit of a jump there, actually, in the Swiss KOF leading indicator back below 100. That's quite a positive because it's like a full three and a bit points above the expectations, a 5 point above the originally published KOF indicator last month. So that's a bit of a positive there. And then I'm going straight away to jump a little bit. The zoo expectations as well have improved from a negative number to a positive number. And Ali, you're asking about the Euro Swiss back below 93, indeed. And I need to add something here straight away regarding Swiss francs. For several months there, and it's a regular reoccurrence, we have seen Swiss franc being bought into the end of the month. And again, we are now, and this is the one day before the end of the month, where we have seen this really market Swiss buying into month end. So not saying it's going to happen today, but it's something that has happened very often over the course of the past even year or so. Especially year end, there have been big flows, but even the monthly flows have been positive Swiss. So I would say if it happens, don't be surprised. We can never say for sure that it happened. We know from IMF data as well that central banks have been increasing their Swiss reserves. Put it in context, they have increased from 0.4 to 0.8% of FX reserves. That is a very, very no, actually no, from 0.2 to 0.8 in the FX reserves. That is a minor percentage, very, very small. But if you look at the increase, they have virtually quadrupled over the first part of the year. So it is a fact that Swiss franc has seen buyers. So the only thing I would say about that is that don't be surprised if we see it again, okay? Just leaving it there for the Swiss franc. I'll look at the perhaps the chart a little later. But Ali, I mean, I've been talking about 92.90. It's been a bottom. I don't know, like 5, 6, 7 times now, and we are still holding that level. I think that's your nearest level that you need to watch. Okay, back to the data. Spain continues to print in very, very decent numbers as well. Yesterday we saw the GDP being good, and even though we had a negative July headline CPI and on the monthlies, we are still holding pretty decent or sticky, I should say, sticky levels on inflation data in Spain, which is of course, if your economy is roaring, it's a potential result of it as well. Um, Dutch GDP, yeah, okay. Italian GDP though came in a little bit negative. I don't know if our friend Magix is listening, but mate, you should do a little bit better. I think you should consume a little bit more there, Magix, to beef this number up again, yeah? Um, German GDP back into contraction, small back into contraction. The year-on-year number, because of very bad numbers last year, is still in positive, but we're still not out of the woods over there. And then we're moving over to the European data. Um, the the surveys, business and consumer surveys, have shown an improvement, okay? Even though consumer confidence as such, but we have seen this number being negative for I don't know, since I don't think that I've seen it personally positive for more than a couple of months in my whole career. Um, the num the global numbers here are still negative, but the sentiment seems to be improving a little bit. Still a dynamic 0.1% growth in Q2. But again, let's just put all of this in perspective, because we have seen front running. We have seen a lot of anxiety as well in across the globe. Um, we are already well into Q3, and even though GDP numbers have an impact, will have an impact, always will have an impact, we still have to take those numbers with a pinch of salt, because the situation, because trade, because negotiations, because nervosity in the companies, etc., and also the consumer is going to have an impact on everything right now. And really, we need more clarity in everything, and then more real data. Once we have this clarity, the data will tell us a lot more. But of course, don't discard them, because the market is obviously reacting to data. What will we have next? The weekly mortgage applications coming out. We will also have the mix GDP, um, preliminary Q2 GDP coming out a bit later. And actually, I'm going to have a little look at the mix today, because the level where we stop this bounce is relatively interesting. And then, of course, the US data ramp. We are now in the acceleration. We will have the ADP. Recall last month we had this big drop. We had a little weaker NFP as well, but not of the likes of this ADP showing last month. So take these numbers with a pinch of salt. I'd say rather look at what's happening on consumer spending, again on the GDP, core PC prices. Yeah, maybe will have also an impact. But then again, remember what I said just a few minutes ago. The market is still very fluid. I mean, the economies are still extremely fluid, right? The situation is by no means fixed, stable. Let's put it that way. And then we will have the Bank of Canada. We know McClem. They're all data dependent. They're not ruling out more cuts. They said that they would be now more patient. Have we seen anything that warrants a rate cut? I would not think so. The situation surrounding the trade talks with the US, we know that it's partially direct Canada US, but then also USMCA related. So we don't have any clarity there either. The dollar cat, I will look at it, because we are at interesting levels here. The Canadian dollar is a bit on the weaker side because of this uncertainty, because of the rhetoric between the both countries is not really one that we can call extremely positive, but we are still not breaking out in the Canadian dollar. Then we will have the pending home sales, and then the EIA numbers, as I already said. And then we are going to move on to knowing what McClem and Rogers will have to dance about during their press conference. And then we will have, obviously, the FOMC. Now, the FOMC, we can talk about it for an hour, and we can talk about it for 10 seconds. And I will try to be somewhere in the minute, in the zone of the minute somewhere. We know about the pressure on Trump. We know about how um, the Trump administration would die to have those rates lower. But then we know also about other political pressure on Powell regarding the Fed refurb, etc. But Powell has stood strong so far, and his most of his Fed FOMC colleagues have still supported that and in one word, supporting the independence of the Fed. Okay, I think that won't change. I think they are somewhere, and they will still be data dependent. But also recall what Powell has said over in the past, that data can also be determining relatively quickly. Okay, so far what we have seen in the data, what we have seen in inflation data, in jobs kind of reports, other reports, we have not seen anything that should push the Fed to move. The thing which can happen today is on the votes. We could have those two dissenters, Waller and Bowman, okay? Because they have thrown their political hat in the ring to be replacing Powell as a head governor of the FOMC next year. So those may be two dissenters. That is what we can have. I think then they will, after having left rates unchanged, there may be something in the statement, but especially in the press conference, it's all going to be still data dependent. But I do think we can find this line maybe back, whether it is during the presser or even in the statement, but we could find this line back that they leave the door open now to September and say that they will be that they are looking very closely at any changes in the data instead of saying just we are data dependent. Okay, so basically they stay the same, but the nuances in the wording could be slightly different. That I think is a possibility, right? Of course, the market will take this whole possibility in into account, perhaps sell a few dollars on the back of it. But again, we are back at still data watching, even though they could have a bigger impact and a more immediate impact. They are still they still will have an impact. So if we imagine that at the end of the week, and then I'm thinking about the NFPs, we still get an NFP and a jobs report that defies the laws of gravity and stays better than the market can fear. I mean, the dollar could come make a comeback. Okay, now we can't talk about all of this without talking about month end. Okay, if you look at what's happened in the equity markets, etc., there may be a bit of rebalancing going on. Um, the models are calling for very mild dollar selling, but it all should be very mild. Okay, so I'm not going to call month end in a big way myself, but it should be, if there is something materializing, which they could actually front run the FOMC and see something about it on today's London fixing. And then we move over before the next flow show. We move over to we will have the Bank of Japan as well. Yes, we see some Chinese data here. Oh, by the way, talking about China, they just decided on their next plenum meetings. They should be held in October. They should be held in October. Basically, I think the lines will remain unchanged about we need to support the economy, etc., etc. But we will have some manufacturing PMIs tomorrow as well. We will also get them in Japan, and we will have the industrial put IP, the large retailer sales as well. Those numbers may not have an immediate impact on what the BOJ is doing. Most of us agree that the Bank of Japan is not going to move. I think in their outlook, they could still say that things are moving in the direction of the next rate hike, but I don't think anything here is sufficient for them to hike rates. And we still have enough uncertainty surrounding the signature of that trade deal. We also still don't know exactly who Ishiba is going to go in ship with if in the new government. I don't think anything warrants right now for the Bank of Japan to hike interest rates. Okay, Ueda will keep the door open. That is what they usually do. They will, like everybody else, be data dependent and leave the door open for a further hike. But again, in the bigger scheme of things, we are talking about, even if they raise another 0.25%, we are talking about 0.75% here. We are not talking about a high yielder by any means anytime soon. Okay, so that is it about my for my previews for the central bank. So let's have a look at the rates. For a change, I'm going to first have a look at this dollar cat because I promised you to have a look at it. So this thing has been building for quite a while. We had this big triangle, also the big near horizontal move here, but for the best of 2 months, we have been trading kind of below it, and I've also been saying always been saying like this 137, 138 zone is important to me, and we have been trying coming back down, trying coming back down, trying again. So now we are here again. And this may, over the next, or this should, over the next couple of days, be very important. We have the Bank of Canada, we have the FOMC, we have a slew of US data. We will have more tomorrow and on Friday. We could be, we are in a bit of a decision zone here, okay? Give and take 138 will be a first indication. You can actually say 137.90. We are very close. Give and take 138 will be a first decision level, but then I'm really thinking about this 138 2030 zone. If that starts to go, then I think we will start to push higher again. We may then build a pause here around 139 and a quarter, but if we break above, this is going to be a big break, I think. Okay, so watch out for 138 and then coming back down if we fail around here. But if we get a confirmation through this 138 2030, I think we are going to trade 140 relatively quickly. But for as long as it doesn't happen, I personally am going to really respect these levels, because if we fail and then we go back onto a much shorter time frame, if we fail and we start to get back 137.30 and then maybe 137.15, but then I'm also thinking about this 136.90 here. If we start to get back below there, it's going to confirm a new potential triangle, but especially some range trading. But I think in the bigger scheme of things, if you look at this, back to what I was looking here, and by the way, I've put the Ishimoku cloud on. We are bang on the top of the cloud as well, but I don't know if in the Canadian dollar it's really that important. But if we fail here again, okay, the short term is one thing, but it may mean that actually this is a big retest, and we are maybe finally going to have this move down to 134. For that to happen, and for that to happen, we will need something negative on the dollar, and we may have to get something positive on trade also as well, because from now here it is a 3.5 big figure move, but don't forget that we have seen much bigger than that before. But I think it's important enough now to have a real close look at what is happening in the dollar cat. Okay, and then I'm going to make Bran happy. Brand cable, we are again, and we're actually back above 133.65.75. Sterling is doing very well. Forgive me if I missed something for the sterling, perhaps overnight, some lines, whatever, or market trading, the positive vibes between the US and UK, perhaps. But I may have missed something. But we are back above, which is significant enough, I would say, because this is the hinge of around everything, around which everything will turn. I think for the sessions potentially to come. We have 133.10, 133 the figure, quite important to the downside. Any move below there should see an acceleration then into the 132.5, which to me is a very important level to the downside. If we hold above, I think we are going to be relatively quickly back up around 134 2030. I still would say range. all else all else equal. Let's assume that we don't get huge numbers or huge divergences on numbers or nothing really bearish on the dollar. I would still say that this is a valid range to trade right now. But if we get above, then I think we are going to have a relatively quick move back up to 135 because I think the market has been really selling sterling on this move lower, or at least getting out and then and lightening up a lot of potentially long positions that they had in the sterling. Okay, at the short term ones at least. So if you get above 134 and a quarter, I would think we could see an acceleration there. Euro dollar, we're basically um, we're basically calming down right now. Between I would say 125.30, 125.20, 115, sorry, 30.20, 115 three quarters, where we topped out overnight. That's the initial range, and then we wait what's going to happen on the US data. As I said, this block, this 3-day block, should be quite important. Okay, if we get a bit of a move above on negative numbers, or having to wait for the hint that Powell may give us that the day of action is getting closer, okay, then we may see a move back up to 116. But then here, I think this zone here, that little crossroad here around 116.20, and then here 116.40, those are going to be additional levels to monitor. We've seen this 116.40 pop up quite a bit of times as well. So I think this is going to be a relatively important one. If in turn we get strong US data or something rotting in between the EU and the US again, 115 is next, right? 114.90 figure, 115 is next, and then don't dismiss 114.40, 50. Okay, low here, high here, zone here, high already in the past, 114.40, 50. Okay, the market may get a little bit psychic if we break below 115, but this is not the first time that we have seen those kind of break below and then starting to ramp higher again. I am for sure myself not going to forget about this 114.40, 50 zone, because I guess it may have important as well. Just a quick additional information: the overnight straddle is, which is the options market, uh, buying equal legs, equal dates, which is the overnight equal strikes, calls and puts, is again pretty relaxed about all events today, all data today, and it's trading around 55, 60 pips. So if from current we see a 50, 60 pip move, which is going to take us exactly into those zones, we also may find some option hedgers which are holding this thing in a range. Okay, so that's a bit of an additional information there. Yes, you're asking about the Aussie. Well, look where we are, 64.97, just around 65. Again, this trend line, okay, a bit close for comfort over the US data. I would rather go and have a look at 64 three quarters, the past low here, and then a bit of a double fib action around 64 40 50 as well, for more solid supports if we get down on the if we go down on the data. Top side is just the eternal 65 35 50 still. I mean, that is going to be the hurdle again. And every time we get up there or close there, we there is not enough strength to go higher. So that's going to be the big level, or the decent level topside again. If we get above there, very little to hold it back from for a retest of closer to 66, the figure. All right. Yeah, euro sterling. something is, and again, I haven't seen in, and let me just go quickly through your comments. Pop. Magics, yeah, you weren't drinking enough wine. That's it, mate. Why Italian GDP is lower. Yeah, euro sterling. I think it's really a case of maybe putting stops through because I haven't seen anything. We could still argue that the euro has lost steam. Okay, I mean most of the euro crossers um, take away the euro Aussie right now because of those data. Most of the euro crossers are the majors are still a bit sluggish, a bit whatever, but. These may just be a few stop runs. I have not seen anything in the news myself. Um, I've not seen anything in the news really myself to warrant another 20 pips or so drop today. But it's just a case of getting out of more euro sterling longs. Now, let's have a quick look at where the more important levels would be. So as I said yesterday, 85.30, we are there. That 86.30 is going to be a bit of an important one. And then here, around 86 the figure, 86.90, 86 the figure. Okay, I think that is your next major support on the euro sterling. To go higher again, we need to creep over that 86.55, 60, and then ideally above 86.70 to then start to push higher. But look, it may still be only another shoulder, but I'll leave that over to the specialists if they want to comment on head and shoulders. Then, if that would happen, but yeah, it's. I'm not going to stand, or I'm not going to pick up any pieces here before I get a look at 86, the figure, or start to move higher again. You see what I meant about this euro Swiss? Yeah, I know dollar Swiss. I've seen you, Ali. This Euro Swiss, look, 82.90. Yeah, we just went 88, 87, 82.90, 82.90. We're back trading around 93, the figure. Okay, it is a big level. Okay, can it break? Yes, it can always break over the month end, whatever. And we could always have a look at low 92s, okay, or 92 and a half, right? Um, is there fundamentally anything that justifies it? Maybe the euro being a bit weak as well, but I think it's more a case of really those Swiss flows, and they have really not participated in anything of the Swiss real weak data that we had. And of course, if we start, as I mentioned this morning earlier, if we start to have better Swiss data, perhaps we are going to go for this move down. I'm very light in position. It's not something that's going to hurt my portfolio, but I'm not going to hang around for too long. I may be waiting for the month end to see what's going to happen here. If we get some kind of like this move or so, but yeah, really, I'm not too involved in Swiss right now. And this is the last one for today. Dollar Swiss. Well, look where we capped. We tried to break above this line, couldn't, and we are now already looking back at what may happen in this little zone here around 80.30. Yeah, people are talking about this 80 level, okay, but that will depend really. I think it depends more on the dollar than what's going on in dollar Swiss. If you get a move back above 80, 70, 80, then I think we can continue to push a bit higher. Right, ladies and gentlemen, I think, and I hope I've prepared you well for what is going to, or what may happen on over the data, over the FOMC, et cetera, et cetera. Gold still well. I think for me, this is neutral territory, right? Even though we are below the trend line. But as I said, this is going to go up and up and up, and I don't know whether I still want to look at that trend line personally. Um, just know that and this could be explained also by the relative inability for gold to hold rallies. Apparently, the Chinese account have been going out of gold ETFs, going back into stocks. So, as I usually say, you have to look at what Asia does during their sessions with gold. Well, they haven't done anything anymore with it so far. Okay, for the past sessions. And with that, have a good day. Stay safe over the data, okay? Don't do anything stupid. Tomorrow the market will still be there. And let's talk again tomorrow. Thank you, everybody.